What's up, guys? Welcome back to my channel. So we have a lot to talk about, starting with the NASDAQ, and I'm going to briefly touch upon Oracle, and then we're going to talk about the Mag 7 earnings. Meta and Microsoft just reported, and then we're going to talk about the FOMC meeting where they left interest rates unchanged. And actually, I don't know why a lot of people were just talking about why they were getting a surprise rate hike. I mean, probably Citadel tried to spread false narratives around the market and try to get the market to sell off, but interest rates are unchanged. The market indexes continue to sell off. So I'm going to break this all down for you guys and let's get right to it. So there's a lot of fear in the market currently. We have the US-Iran war. Now, it looks like they were going back with the ceasefire talks, early in the week, I believe, and now Iran is going with surprise strikes, and then the US is going back and forth. And so it looks like the war isn't going to end anytime soon, right? And so Iran here, it says it will punish the aggressor today after a heavy wave of US strikes, and that actually came after Iran was going for a surprise strike, I think a couple of days ago. Here you can see that, Fed Chairman Warsh's credibility in question after rates left unchanged. Microsoft popped after earnings while Meta didn't do so well. So first I want to talk about the earnings for Microsoft. You can see that it was a record year driven by strong demand across Microsoft Cloud. 331 billion in total annual revenue, 18% revenue growth. Microsoft Cloud continues to grow strongly, and you can see here Azure, other cloud revenue services growth up 43% year over year. So things are looking well for Microsoft. I've been talking about how Microsoft has, deep roots within the enterprise space. So when the stock got punished month after month during the first half of 2026, it literally made no sense to me because Microsoft is a company that's set to benefit regardless of what happens in the AI space. And so Meta had a different, look to it. Meta actually didn't do so well. If we look at the charts here, Meta dropped around 585 to 531, about $50. There's concerns over AI spending and things like that, and it's just taken a big hit. So you can see that opposite reactions between Microsoft and Meta. And interestingly enough, a lot of IGV stocks like ServiceNow and Microsoft is starting to gain traction. So you can see like ServiceNow is actually up 4 days in a row. Microsoft got that big pop after hours. And so investors are rotating into software names and IGV. So you can see that, there isn't really mass panic or mass correction, if you will, if investors continue to actually just rotate in the market. So I believe that eventually with the chip stocks, with the triple Q, the SMH, semiconductor ETF, I believe we're going to find support somewhere around the 100 or even the 200 moving average. I know a lot of people are talking about retesting the 200 moving average, but I would not be surprised to see a fake breakdown and then a undercut of the 100 moving average, and then a prompt reclaim of the 100 to hold this key area as support. And pretty much the same thing with the triple Qs. You can see that we broke down today after the FOMC meeting below the 100 moving average, which is currently sitting at 673. I will not be surprised to see an undercut or even a gap and go above and close above the 100 moving average today. And if not, I mean, we could possibly retest this 200. But as I mentioned, there's a lot of people just, looking at this 200 daily moving average and thinking that we have to go and test it. We don't have to test it. You can see the RSI, daily RSI, is very, very oversold, just like we were back in March of 2026, which is 3 months earlier this year. We already retraced about 50% of the move, the entire move from April. And so this is a really key spot, I believe. I think we're going to see a lot of action here to get some sort of rebound, and if not, a little bit more lower to test that 200 moving average. And things aren't looking pretty on the weekly moving average, weekly time frame, but you can see that the next key support area is at 50. You can see last time when we had an issue here, we closed below the 50. People are saying we're going to go back to that 100 moving average, 100 weekly, but we didn't do it, and then we promptly reclaimed that the following week. So I mean, we could possibly see something similar with the QQQ on the daily time frame. And going back to Oracle, you can see that, Oracle is still in this 118 to 120 range, or fell to 117 after hours, hit 118, almost 119 today, after hours. And you can see that I believe the MACD, see the MACD continues to firm up, the RSI continues to firm up as well. I believe that there won't be a big move on Oracle, unless the stock market, the entire stock market starts to move, like the QQQ, the S&P 500. So honestly, we're still in, that range here. We're still in that 1 to 2 week period of consolidation before it starts to move higher. I have no doubt in my mind that Oracle is going to get a good pop in the next few weeks. So the next thing I want to talk about is actually uh, cycle analysis. Now, this is someone I follow. I don't really follow him that often because he's not really that accurate, but this guy Steve Miller, he goes under the handle like Ask Slim. He does cycle analysis, so pretty much that's his thing. Sometimes I do like to take a little bit of a reference as to what he's seeing, and sometimes the timing could be off as well, so which is why I don't really follow him. But you can see here that he has a trough around the August-September time period. And this was recorded about a week ago. See, the Nasdaq was holding support around here, but this week it broke down to this area here. And I believe that after this sell-off is done, you can see that after this sell-off is done, we're going to get a nice pop, out of this area. And this is on the weekly time frame. So I have no doubt in my mind that whatever sell-off we're getting for the Nasdaq, whether it bottoms out here or maybe goes down a little bit lower, that we're going to get a nice pop. And whether or not it's going to make new all-time highs has yet to be seen, but I believe, based on cycle analysis, that whatever is going on here, whatever sell-off, whatever capitulation, whatever fear we're having is going on here, that we're going to get a nice pop out of this. And you can see that I've been talking about market psychology for a very long time, but I believe that, when everyone is talking about, when there's so much fear out in the market, the Mag 7 earnings, the potential for a surprise rate hike, which obviously didn't happen today, and the U.S.-Iran war, the oil issue, the inflation issue that could possibly happen from the U.S.-Iran war, like all this is so much fear in the market that normally people would expect the markets to just crash, but this is usually when at peak fear the market just bottoms. I just don't know how to explain it. It just bottoms on peak fear and then starts reversing back up. News gets better and better. People starts expecting better news, and so amidst all this fear, look at the Nasdaq, the NDX, the cash index here. You can see that it's pretty much at levels where we bottomed out in April. So whether or not we bottom out here a little bit lower, I believe that we're going to get a really nice bounce for the entire market. And I still believe that the triple Qs would lead, because you can see that there was a period of time where the QQQ just kept selling off due to the semiconductors, and the S&P 500 just did not sell off. But now you can see the S&P 500 starting to sell off. But I believe that out of the gate, the Nasdaq should lead, and so should the semis by default. So there you have it. I hope you guys enjoyed this analysis. If you guys have any questions or comments, feel free to leave them down in the comment section below. I do post all my trade analysis on my Substack. Link is also in the bio below, and I will see you guys in the next video. Peace.